Hi guys, this is Martin from daytradingcoach.de. I welcome you to our weekly trading show here on Traders Yard and of course on GoToWebinar if you're logged in via GoToWebinar. Well, with me today are my fellow friends and traders, Rudi, born, based in Frankfurt and living in Japan most of the time. And of course also my good friend Gilbert Kreuzthaler, CEO of xTasyTraders, based in Vienna, Austria. Myself, Martin Görsch, professional trader also from Germany, and we would like to present you several trading ideas again for this week, very interesting week, and I guess we do have a lot of interesting setups for you, maybe some profitable trading possibilities. Check out the show and yeah, just take a look at the charts and you will see why we want to trade the stocks that we are showing you today. Before we start, very, very important, trading involves substantial risk of loss. Please consider carefully if this style of trading is suitable for you. And of course, everything we are showing today is for educational purposes only. We are not showing any recommendations to buy, sell, or hold any stocks or securities mentioned. And of course, as we are traders, we put our money where our mouth is. So it's very, very possible that we do hold positions in the stocks we mention, or at least plan to open position in these stocks. Okay, so consider all these trades, know your risk tolerance, know your time frame, and act accordingly. So let's start with something that might be also interesting for some of the international traders as well. This is the German DAX, and as I'm a German trader, I love to trade German DAX. It's really a cool instrument. It's a good market to trade. It's quite a large future. It's 1 point is worth 25 euros. That's a lot of money actually for a future, but most of the brokers also offer like the mini DAX and the micro DAX. So you can trade it with nearly every account size that you could mention. And I would like to show you what I think about this market and how I am planning to trade this market. So let's start as always with a look on the weekly chart. And as you can see here, of course, like most of the other indices as well, the DAX is in a valid uptrend. It was trading a little bit around the 10-week moving average up here, but what we are seeing now and what I really like at this market is we have this strong last up move here for several months going really through the roof actually. And now we are like in something like a sideways phases, like a basing point here in the market. And I'm watching closely for a breakout to the upside. We can see RSI is still strong, coming down just a little bit, but still holds above 60, 65. That's really strong. My Gersh trend indicator indicates that we have still a strong uptrend, a valid uptrend. So that's why I like to trade this market on the long side at the moment. Maybe somewhere down the road, it will switch directions and move to the downside. And then we will take a look at the short side and maybe try to catch some down moves to the next support levels. But at the moment, we are at a large resistance level. And if the market manages to break above this resistance, this could be a nice long trade again. On the daily chart, we see something similar. We have this last up streak here, 1, 2, 3, 4 days, very strong days. And then, switching into a sideways phases. During this sideways moves, we got something like a bull flag in the market. Last week, in the middle of the week, we saw this huge breakout to the upside. And what I really like is that we got a continuation move to the upside as well. Price got rejected only a few points below the all-time high, maybe 9 or 10 points, I'm not sure, but very, very close to the all-time high. And what's kind of strong is that we do not really see a big kind of rejection. So not a big market move to the downside. It's moving sideways. It's the second day now, like moving sideways. And it seems as if this market is just collecting some strength to get this big breakout to the upside. So the important level is this one above here. This is around the all-time high. And let's take a look maybe at the 1 hour chart to see the move of today. We got a strong start in the day, and afterwards market got sold off a little bit, and now yeah, moving somewhere around the 1570-ish levels. This is support, but I guess it would be very important how the US market opens at 3:30 our time. And so this is in around 90 minutes we got the opening in the US. And well, after the US market opens, the DAX sometimes is just following the US market. In the beginning, with a little bit more volatility, to the end of the day, a little less volatility. So we only got 2 hours of trading in the main trading hour after the US market opened. And then the main market in Germany closes already. So we have to be careful what the US market is doing, but I guess if S&P and NASDAQ are still strong and still move to the upside, we will see a breakout to the upside in the DAX as well. So that's what I'm looking for here at the moment in terms of the DAX. So what's the next market that I do have prepared for you? The first single stock I want to talk about is Coinbase. I guess most of you know this company. It's like a crypto market, a crypto exchange where you can trade like any crypto market you could think of. And maybe you follow the Bitcoin price. Bitcoin moved above $45,000 again, is somewhere around 45 at the moment. Quite strong over the last few days, made a huge breakout, an important breakout to the upside above $41,000, and could move back to the way to 60,000 somewhere. Ethereum also very, very strong at the moment. And this is typically good for stocks like Coinbase. Coinbase is quite a new IPO. They entered the market this year, and where prices really pulled back. You would see it when we take a look at the chart in a few moments. But before, I want to take a look at the numbers. We had a slight earnings miss in the last time where Coinbase reported quarterly earnings. And we are very close before reporting the next quarterly earnings in 2 days from now, I think on the 10th of August. Oh, well, that's tomorrow, I guess. We get the next earnings from Coinbase. So I would not advise to enter the market before the numbers are out. But what I'm expecting is actually quite good numbers. We can see it here in the last quarter. Revenue stream was really pulling up. We had 1.8 billion of revenues for Coinbase, and big earnings as well. So we see this market is really growing quite fast, and what I would expect is that this growth continues. And we see earnings that are expected are less than $2.30 a share, and the last time where we missed earnings a little bit, we had more than $3 in earnings a share. So this is going to be very, very interesting how this company performed in the last quarter, and it would be very interesting to see on the chart how the investors are reacting to the numbers. We can see in the larger picture, Coinbase is lagging the overall market. Over the last 90 days, they lost around 12% in market cap, while the overall market was gaining more than 5.6%. But over the last 7 days, we see Coinbase moved 9% to the upside, while the market was more or less moving sideways. So this implies that earnings are going to be quite nice, that the investors are awaiting good numbers, and this is why they start buying already before the numbers are out. But because of this big move right here, and I guess we are going to see a gap up today on the market as well, so it would be more than 10% above over the last 8 trading days, and I guess that's run too far before the earnings to just jump on the train. We have to wait until the numbers are out. But what I really like is like this free cash flow we can see here. So Coinbase really has a lot of cash in the pocket, and there are some nice things that they could do with this cash. They could buy other companies or invest the money, maybe even in cryptocurrencies. I guess that's what they also would like to do. As we see the rising prices in the cryptocurrencies at the moment, we see the revenue stream that's moving up quite nicely, and of course earnings are moving up as well. So overall, the overall picture seems quite bullish. Now let's check the charts and see how it could perform on the charts. Okay, weekly chart up here. We see this was pre-IPO. The IPO was quite strong, so the opening of the IPO was way above the IPO price. But the first price we saw on the market was around $380. Then it moved up quite fast to more than 420. And then that's it at first. We have 1, 2, 3, 4, 5, 6 weeks of falling prices. And now it seems as if we made a bottom in this stock above $210, somewhere around $210, the huge support level. And what the stock is trying to do now is break out of this base building phases here. So this looks quite bullish, this looks quite nice, and we see even if the market is only reaching the first price after the IPO, this would be a gain of around 50% on the stock. To the downside, the last low, or even the lowest low that the price ever made after the IPO, we have a downside of around nearly 20%. So even if we intend to buy here and get stopped out of the trade at 209, if we choose to use a stop loss on this trade, we have a risk of around $50 per share, but we could earn around $123 per share. That's quite nice risk-reward ratio. And as I'm expecting good numbers, and as the crypto markets are bull markets at the moment as well, this might bring further upside to the stock, and maybe we could see levels around 350 to 380 again in the stock. On the daily chart, let's see how the chart looks on the daily. We see we do have something like a triangle here. Quite nice. On Thursday we got this huge breakout to the upside. On Friday the stock tried to break out above the June high already, but got rejected, and it's going to be very interesting where the market is opening today. And I guess maybe we would open somewhere up here at around 265. I'm not sure, but this would be something like a buy trigger as well. But please keep in mind tomorrow quarterly earnings. This could throw the stock up and down in huge volatility, and you have to be very, very careful with trades that you intend to open before the earnings. Okay, so that's the first market that I guess is really interesting at the moment. The second one is Square. Square is, if you don't know Square, it's like something like a payment platform. They're doing hardware and software for payments. A little bit similar to PayPal maybe. And Square already had the numbers out, quite nice numbers. Really good. Let's take a look. We see strong revenue, still very strong revenue, more than 4 billion a quarter. We see bigger earnings than the quarter before. Even though revenue was a little bit less, we got bigger earnings than in the quarter before. And therefore, we got a huge earnings beat here on the markets. And we see what's really nice at the fundamentals is this move up here. We see year after year after year, we see very strong growth in Square. And as you can see, where is it? So here. Okay, as you can see, growth even got stronger. This is first quarter 21, this is second quarter 21, and we see third and fourth quarter 20. So what I would expect for the whole year would be a revenue that's somewhere up here. And this is what I want to see in the markets if I'm thinking about investing in a stock. I want to see the revenue grow. I want to see the earnings grow to the upside. That's very healthy normally for the company. So let's take a look at the performance, at the shareholder returns, and this is quite exceptional. We see over the last 5 years, the stock made more than 2,200% of shareholder returns, while the overall market has around 98%. That's a huge, strong outperformance. And it really doesn't matter what time frame we look at, 7 days, 30 days, 90, 1 year, 3 years. Square is constantly outperforming the overall market and is also outperforming the industry in a huge way. And that's why I really love this stock. That's why I'm invested in the stock for quite a long time already. But I think the actual situation is still good for maybe building up some position or adding to your existing position. The top shareholders, that's also very interesting. CEO is Jack Dorsey. If you know the name, Jack Dorsey is the founder of Twitter and the largest shareholder of Twitter as well. So I guess there's a good connection also between Square and Twitter. As you know, Twitter is trying to switch their models to payment models so that they have paid services for the customers as well to earn some additional money. And this, I guess this might be a good connection to Square as well. So that Square would be the top product to pay for your paid content on Twitter. What is the chart telling us? The chart of Square. You see, this is earnings day here. So earnings were quite good. That's what we said. We see the huge volume in the market on the daily chart. Very, very nice. And then we had a great setup here. This is a huge rally on the daily chart, then rejection at the last high, and then 2 days of rest. And I like these 2 days of rest patterns. Often on the third day or on the fourth day, we see that the strong up move is continued. And that's what we see here with Square as well. We made new highs. We got rejected at the new highs, got kind of retracement on Friday. And I guess the situation where we are at now, this is support level here at 275 and maybe down to 268. This is all support area. And it might be a good place to add to your position somewhere in this area, somewhere in this level. On the weekly chart, we see very interesting this huge sideways range. And what I typically like at these about these sideways ranges is if markets are in strong uptrends on the weekly chart. And we see this uptrend is really strong. The RSI is above 70 most of the time on the uptrend. And then we are seeing such a huge sideways phases, and we have a test to on the lower side, upper side, lower side, upper side, lower side, upper side. And now it seems as if the stock is collecting strength to break up above this level in a huge way. And in terms of targets, we can just take this range and put it on the breakout level, and we see the actual price target around $360 would be the long-term price target for Square, at least. And the reason why I say at least is if you take a look at maybe NVIDIA or Adobe, let's take a look at NVIDIA. NVIDIA on the weekly chart. Okay, that's not really a down move. Okay, that's a stock split. But what I wanted to show in NVIDIA is that we have something like the same setup here. We have a strong up move, strong market on the weekly, most of the move of RSI above 70. Then we have a huge sideways range, and then we got this huge breakout to the upside, and market directly moved to the target. And we have a lot of stocks in the last weeks that all reacted in a different, in a similar way. So this is Chipotle Mexican Grill, huge move up on the weekly, huge sideways range, and then just needed 1 week to reach the target. Adobe is the same thing. So ADBE. Let's take a look at this one as well. See it here, huge up move on the weekly chart, huge sideways range, and then just bomb, reaching the target. And that's what I'm expecting for Square at the moment in a similar way. And this is why I really like the stock at the price we have it now. I don't think it's too expensive. Let's take a look at the stock once again. Where do we have it here? We see it's preparing for the breakout, and if we see this breakout, I guess it would be a nice thing to be long in the Square stock. Okay, that's it so far from my side, yeah, I'm handing over the mic to Rudi, I guess. Rudi, are you ready?
Yeah, that might be true, indeed. Yes, I'm ready and looking forward to talking to you and give you my ideas for the trading start for this week. Maybe there's something valuable. Thanks for your insights so far. And thanks for handing over the screen. Give me a second so that I can switch to it, and to give you the best side on the chart. I will switch off my cam because that's most important to see what the chart is showing us. So hopefully you can see clearly what I'm talking about now. And this is a CCI, and as you know, I'm not so much interested in the company as well. I'm not caring so much what the company is doing. Of course, it's nice, but it's for me, it's side knowledge. It's not really important for my decisions because I'm merely focused on the price movements. I'm only interested in a price difference, maybe to the upside. If I have a long position, of course, I want to sell higher, but sometimes it's a short sell and waiting for lower prices to buy in the close the position. So I'm not really interested in the stock itself. But in this case, of course, I have to talk about this one. You can see here CCI is the symbol for that, and it's Crown Castle International Corporation. And you can see it is a stock which went up really, really strong in the last few years. Let's say like this. But currently I'm focused more on the lower time frame, let's say on a daily chart or even a 4-hourly chart or hourly. It depends on what time frame you prefer. 4-hourly is a little bit funny time frame for a stock maybe, but you can switch to an hourly chart as well. This is more for the future market where we use the 4-hourly charts or the commodities and currencies, for example. But the most crucial thing in this situation is that the market, after this great run to the upside had now something like a gap to the downside, and this is the strongest, the strongest chance of a movement. We can call this definitely as an impulsive move. And as an Elliott wave trader, I always like really strong market moves. First of all, they are indicating the main trend. And why the main trend? The market went up. Yes, indeed, it went up. But the last few hours here in this path were really, really strong, and it's way stronger than the up move. So this is indicating on this special time frame the last strongest direction, which is the main trend in my eyes. And the good thing is when the next movement, the counter movement, is really indicating this is only a counter trend, and this could be done by an ABC move, a three-wave move, for example, or otherwise, if not an ABC move, it could be something like a really shaky move, back and forth, back and forth. And you can see, yes, we had exactly this one here, this chart pattern or this chart area here. You can see whether you use trend channeling or not, but you can see this is really a weak movement. So I compare both sides of the method. The strong move was to the downside and the weak move was to the upside. And this is indicating, yeah, we are moving up. This is an uptrend. It definitely is an uptrend because we have been here. Now we are here, and the highest point was here. So yes, this is definitely an uptrend, but it's a way weaker uptrend than the move below we have seen here to the lower end of this chart pattern here. So in this case, I think of the first part is the strongest move, the counter move is to the upside, and the next one, whenever this counter move is over, should be a continuation into the strongest direction, which was to the downside. In this case, we can just draw it here in this case from here to here, for example, and the highest point was here, and I can just a raw idea where the market needs to go is this level here. It's a one-on-one 100% projection. The first part here, the second part here, which is roughly the same size, which leads us to 180.88, roughly, not on the cent exactly, but roughly to this area. It can be more. Why can it be more? There are two patterns indicating a really strong move, two typical patterns. One of it is a typical strong move like this. But if you have some magnifier glass, you can see that very often this is a move that is divided into some parts. It's a strong move interrupted by a weak move, a strong move again, and a second corrective pattern here, and a third move into the direction. Altogether are 5 waves, and this is a typical 5-wave strong movement. And you can see this is perfectly fitting. Okay, this is just by chance, but this is perfectly fitting into this idea. So this can happen. It's not a 100% sure that this will happen, but this is a really, really typical movement. We have another one, which is looking a little bit different. It's looking a little bit like this. A strong move to the downside, and then a shaky move to the upside, and then another one to the downside. This is looking more or less the same, you can see. Also fitting here, but this is only an ABC pattern. It's only a corrective pattern, or we call it a zigzag. Very strong at the beginning, really shaky in the middle part, and very strong at the end. So this is the second situation, which is really, really suitable for the current market situation. I don't know which one will happen here, but you can see even in this case, which is not leading us too far to the downside, we can expect something like the same size here again here. If this happens here, then it's even more. We can expect even more. But if you're a little bit cautious, you don't want to stick too long with the position, not knowing where the target is, you can just think, okay, whatever happens, I will take profit in a 100% projection here to the downside, which is roughly this level I've mentioned here, 180.80 roughly. And then I take my profits. And even if this market is falling any further, yeah, it's okay. I had my fun already. If the market is turning, I can say, hey, I'm so happy that I took profit here at that point and bought in and closed the position at that point. So, but you can, of course, use a trailing stop. You can say, okay, I stick with the position or just close half of the position. There's too many or so many opportunities. You can grab here, you can stick with the market and saying, hey, I'm in the positive area already. I can trail my stop, whatever you prefer. I'm a typical risk taker or a profit taker, so I will close my positions at that point very, very often. But of course, you can use your own ideas on this one. But the idea behind this is that this is following in the aftermath of this correction. And that's a really important point. When is this corrective pattern ending? And there's some indication for that. You can, of course, think of if the market is breaking through the last big lowest point here, the last one, we had here this point here on the upside, we had here one, and this is the lowest point in between. So this can be a trigger for a short selling position. So when the market is staying above this level, which is roughly at 190.60, please check it out on your chart by yourself, but it's roughly around this level here. When the market is going through the low of the 29th of July, then more or less it seems to be sure that this one is over and the market is on the fly for the next run to the downside. Of course, you can try out something a little bit more aggressive. I think there's another one we can take in this case, which is this level here, for example, which is the lowest in between these rising area. But you can see this is inside the trend channel, so we call this an aggressive entry. This gives us an opportunity of being a little bit earlier into the short position. This gives us a way better risk-reward ratio because the distance to the target is a little bit far away, and the stop, which could be the highest point here, for example, which is 1 point, or the 78.6 level I've mentioned that before already. Then you have a way better risk-reward ratio, but of course, on the cost, you trade the better risk-reward ratio on cost of the probability of being on the right side, because there's still a chance that the market is going here to the lower end, triggering you, and then moving to the upside, still staying within the trend channel. So if you want to play the higher probability of a confirmation, then you would take this entry. If you say, I'm not caring for that too much, the risk reward ratio is way better here. I can handle some losses in between, but because the profits will be way higher if I'm reaching the target, then you can also take this with a higher risk reward ratio here on the higher level, which is roughly, it is the low on the 3rd of August, and it is roughly at 192.50. So this is my idea here with a CCI, which is Crown Castle International. So you can see this is a short selling opportunity, because sometimes the market needs some short sellings as well. I like to have both sides in my pocket. So I have some long positions. Of course, as long as the market is running, I don't like to have too many short positions. But when the market is turning around, it's always good to have some short triggers, at least, to give the market the opportunity to let me in when the market is turning. And this is something I really like. So I think this is useful and worth to talk about this one. But you can also see we have these blue bars here. Some people call it Bourne bars, so we took it over the name. This is something we invented by ourselves. This is just giving us an opportunity that the market is turning very often at that point. I don't want to talk about this one on CCI now, but we have another one, which is ANET. It's Arista Networks. And so it's in the technology area, and should be in a really good mood. If you turn back a little bit in time, you can see we had a really tough time to the upside, really strong one. But on the other side, you can see we had something on the backside, and you can see this is really shaky. It's the same argumentation we were talking about before in CCI, but in this case on a big picture and on the long side. But this is not the part I want to talk about. Now, I want to talk about these blue things, and you can see whenever the market is leaving this area with the blue bars here, you can see the market very often is pushing hard, really strong into one direction. Nevertheless, it could be to the downside, it could be to the downside or the upside, whatever it is. We are not giving a direction in this case. We are just focusing on the fast movement. For me, it's all the same whether the market is breaking to the upper side or the lower side. When the market is breaking through some levels, I will buy this, and if the market is going through the other side, I will sell this one. So this is something I use very often. Some people are asking for this, and like the idea of being not involved in a long position or in a short idea, it is by do whatever you like, market, but let me in at the right time. And this is something I want to introduce here. In this case, we have this situation here currently with the Arista network. So in the market, you can just read the numbers. If it's too fast for you, you can just screenshot them to take over the numbers. It's a really easy idea. When the market is leaving this area to the north, we will buy a position. You can see it's not a 100% chance. Of course, very often it works quite well. You can see it here in the past that the market is at least giving us a good idea where the market is going, but sometimes it's not. So please be advised, whenever you trade, whatever trading style it is, it might be the Fibonacci's, it might be the alias I love very much, it might be the Bourne bars, or whatever it is, be advised that sometimes there might be negative runs. A single one is okay maybe, but sometimes it's a series of 1, 2, 3 negative trades. And so take a good position size so that even if you have a 1, 2, 3 trades in the negatives in a row, that you're not suffering too much or your account is not suffering so much. And of course, your emotionality is really important while trading as well. So keep it on low profile. Don't overdo with a single trade. So, but the current situation is when the market is breaking through this level, I see a good opportunity to buy along the market. And in this case, we are early profit takers, which is really easy to see here, 409.51. So this is our target in this case. Of course, many people are asking us, couldn't you take it any longer? Yes, we can, of course. There's definitely an opportunity to keep a position running way longer than this. Sometimes it's really useful to keep this for a longer period, but it depends on what your trading style is. Do you want to trail your stops? Can you care for a position? Whatever you like. We have tons of trades every day. No, not every day maybe, but every week we have tons of trades. We have several every day. So we can just pick the best part of it, because very often it's only reaching the first and then turning around. You can see here it's a little bit more than this, but it's always good to take this certain amount out of the market or use a trailing stop if you like to. The stop for this one is the early stop here on the upper side. We are not excusing any setbacks too much. If the market is not willing to run, then we say, okay, we close it. So we have a risk-reward ratio here of 2.5. If you like to invent your own trading style, you can keep this in mind. Risk-reward ratio is really important point, but it's always coming together with a probability. Don't ask for one alone. Some people are asking me, hey, you're a professional trader since roughly 30 years now. Your probability of a profit trade should be around 99% or even higher. No, it's not. Definitely it's not, but it's not only about this, because it's also a concern of the risk-reward ratio, because it's quite easy to have a profit trade system with a probability of 99% of a profit if you have a really bad risk-reward ratio. But in this case, it's 2.5 points. Breaking to the lower end here, it's the same to the downside here. This is our target here, and this is our stop on this side. So this is a really, really easy thing to talk about. Just a small thing, I want to talk about the Lockheed Martin chart we were trading. LMT was the symbol here on this. We were talking about that before. I had to cancel the trading idea. I'm not absolutely sure, but normally I guess when we were talking about my trading trigger was here for the long side. You can see bullish, strong movement here and really shaky one to the downside. This was the trigger here on the upper side, but the market went and was falling through the lowest end here. So we canceled our long position, or it was not a position, our long trigger, because we were never triggered here in this case. But now when the market is turning again, this idea, the overall idea is still valid, but because of this lowest end here, we have to adapt this a little bit, because in the first we were talking about something starting from here, but now it's not starting from here. Now it can start from here or maybe even lower. We don't know this, as long as we don't break through the last intermediate high, which is a little bit higher than I drew it here. So okay, this is the entry point. So you can still see, even when the market is not giving directly what we demanding for, you can say, okay, I have to adapt it a little bit. The market is going a little bit lower, but the trading idea is still valid until the market is going too low, which is at latest 15, the Fibonacci retracement 78.6. But also keep in mind the risk-reward ratio. For example, if the market is plunging here next, which is not something I necessarily expect, but if this happens and the entry is still here, then you can see, the risk-reward ratio for this trade is not so good anymore, because this target will also come down. It is only a one-on-one, which is something I don't prefer. So this is from my side, but to give Gilbert a perfect intro into his trading idea, I want just to switch to a weekly chart, because I was showing the weekly chart with before here with my stocks example, and this is something I want to tell you. This is exactly the same thing on a weekly chart, and normally you would expect this will take hours, or not hours, weeks and months until the market is going there. In silver, the market plunged there to the target within a few minutes. So it's absolutely important to talk about the precious metals, and I'm quite sure that we can expect something from Gilbert here on gold, because I know it already. So please stick with us, and I'm more than happy to listen to what Gilbert is saying to us after silver reached the target and turned around already. Gilbert, are you there?
Yes, I'm here. Yeah. Many thanks, Rudiger, for the introduction, for the short one about gold. Good to see it, that it also worked very well with your system. I also have something prepared which I would like to show you around gold. Then I have also two more stocks which are in my pocket, which I wanted to discuss. So I'm just taking over. There is it. So here, make presenter, show my screen. Yes, I think so. You should see everything. Yep. Good. Yes. Okay. So let's a little bit chat about gold. What happened here? As we see, there was a big plunge in, as Rudi already mentioned, in a few minutes. So I just going first up to the 1 month chart as usual, then to the weekly, and then to the daily. What I see here. Yeah, gold, of course, it's always worth discussion. There was a lot of mentioning already in the last weeks, months. So what do we see here? In the monthly chart, just going back to the history, we are here in this resistant phase, but it got already broke, but it did not really stay above this resistance from the year 2011, so it just got rejected and got back here to a certain level. It's just what I see here is we came up, market went down here, and again we stopped, or gold stopped at the SMA 20. It moved up again, because this is always a mark. It doesn't matter in which, or does not matter. Of course, there are some time frames where these rules are working quite out very well. Also, maybe looking into the history, you see here this candle. This is the perfect trampoline pattern here. The market is crisscrossing up and down, and up, getting back, and then making this pattern here with this candle. So this is also following. Also here you see how it worked out also here. I've also seen that here at this point, nice stairway pattern was working out on the monthly chart. So of course these rules, they are working in various time frames. The higher the time frame, the better and the more precise they are. So where we are currently, market went up here. It got out of this line here and again went back to the SMA 20. Here basically I suspected, okay, here we have again where the market just stopped to the short direction, and it seems that the market is going up again here. So yes, this is the situation. Now we are below the SMA 20 on the monthly chart, and of course this is not the best sign. Just later on I will have just a quick overview where the market could go now. Let's have a look into the weekly chart. Weekly chart also shows that the market went down. SMA 20 here, we have a reaction. It broke through to the outer Bollinger Bands, and then basically the SMA 20 was here already a resistance where the market came down, went up again, and this exactly was this phase where I expected, okay, now we made it, we might come back to the SMA 20 and then the market goes up again. It came back, we had some reaction here, but it was very weak and it went into the side, and then by the end of last week already it fell through the SMA 20, and yeah, and very interesting, it came exactly at the point to the EMA 130 of the weekly chart. We see it just on the daily chart a little bit better. So here we see it, the market, here a nice trampoline pattern, here SMA 20, SMA 8, and so on. So okay, the market came back here. We do not see really in the daily chart what's going on here. Let's just switch on some lines where we see, okay, yes. So here we are at the weekly SMA 20 also. But what happened? Then mid of last week already, here there came short signal, a short stairway pattern, which stopped here at the SMA 20 at the daily and the weekly chart, jumped up again. So this already there you could have expected, okay, now the market is going up, but and this day here we see also a reversal pattern into the short direction, and this was basically then breaking through the SMA 20 on the weekly chart, and this was the Friday candle. So what happened now? You see it quite well here at the 15-minute chart, how fast this was. So this here was basically the candle at 12:55 in the night, our time. And yes, within 1 hour, within 15 minutes, the market just plunged down here for about 4.5%. This also happened because this was in the Asian session, so the American guys were sleeping at this moment or were not in front of their computers. So this happened also with not very high volume, and of course if something happens like this, then also quants are jumping in full automated trading systems and trading this thing into the nowhere if it really happens. So this is mostly the reason for these flash crashes, that then some automated systems are running crazy. But yes, we stopped here exactly at the EMA 130, and now it's coming up. But in the moment, I have no idea, to be honest, where it really can go. I would rather say, since we are on a daily chart below the EMA as SMA 200, we are below the SMA 20 on a weekly. We are below the SMA 20 on a monthly chart. I would see that we don't have really a chance to see long setups here in the next time. I rather would suspect that the market now is going back to the outer Bollinger Band somewhere here around, and that we will find us in the next time somewhere around 1,600, something like this. So this might, for me, be a case into the short direction. If the market really makes it to get this candle into a green candle or above the monthly SMA 20, then we have, from the location point rules perspective, a chance that the market is going up again. But currently, as it seems to me, we might get up here a little bit and then go back here around into this area. 1,600 could be, I think, a good target when the market is crossing basically the outer Bollinger Bands. So yes, this is the current situation. So I don't see anything where to jump in. in the moment, but this is just where I think where the market could go and where we could find us with, again in the next time. Okay, so but this was just gold because of the current situation. Let's get into my prepared stocks. I'm still on the cam. Yes, Mohawk Industries, MHK. This is a global manufacturer of flooring products for residential and commercial space. It creates carpets, rugs, ceramic, laminate wood, and so on. So just for for houses. Yeah. So in the annual revenues are quite stable since 2017. Mohawk did not suffer with the pandemic. The earnings are decreasing on a yearly base. Let's have a look at the quarterly. They are getting back into the earnings. They are making good earnings now. Also from consensus, they were always above the consensus. And also recommendations, of course, from the agencies and so on, from the institutions. They are quite good rated, so 7 strong buys, 10 buys, 5 holds, no underperform or sell recommendations. So how does it look like? Again, let's go into the monthly chart. At the monthly chart, yes, was going up for a while here, but this has nothing to do with the pandemic crisis. It came back now, but it turned then somehow with the whole up move of the overall market. It also turned their down phase here, came into the phase where all the markets were gaining, most of the markets were gaining. Here it came up here to this point, got back. We see here a reaction at the monthly SMA 8 and with a good reversal bar, and it seems this month also is already going into the long direction here. So the monthly chart, we are not too climatic. When we look at the history, so it's not too climatic like many other stocks are. So this looks quite fine. So if the overall market is going in the long direction, there is a chance. Of course, if the overall market will get back, then of course there is always the SMA 20, a magnet which pulls the stock or the instruments back. But currently it seems to be bullish. Let's have a look at the weekly. Yes, weekly chart also quite interesting. So here there are well-known trampoline market. The market went up here. Here we have some nice up moves, then reactions out of the SMA 8. It went back. It went through the SMA 20. And here we see, and I just have a look. Okay, yes, we also see a nice stairway pattern here at this moment, and the market is reacting and going up here. So this is basically quite a bullish sign, also confirms the further move up here on a weekly chart. Let's have a look at the daily chart. Here we see a nice reaction at the EMA. So this is also, is it the stairway? No, this is a EMA yo-yo at the 130. So what happens here is also that the market came back here, went through the SMA 20, crisscross, as we already know it, up, down here, it went up. Now here we are in the resistance. So it's a little bit, of course, we need to be careful. Huh? So we are. So here, of course, we are in a resistance phase, but it already got broke by the highs. Of course, you also need to be careful here that we are also at the SMA 20 of the weekly chart, but with the close quote last week, Mohawk already made it to get above the SMA 20. So it's a little bit tricky in the moment here, but so what is the setup? The setup could look like this here, that this candle can be taken with this, with the Friday's high, and it already somehow shows also where the next target could be. So here we have the last relative high in the market. So if the market really makes it to break through here, through this level, there is a good chance that Mohawk could reach the something around 230. Of course, there is also a possibility, as I always say, if the entry and the stop is that far away from each other, there is always a chance to wait, maybe at this moment, that maybe the market goes up, comes back here, makes a more tight entry candle here, and goes then in this direction. So maybe a good idea would be to go in with a smaller position at this level with the stop here. If you see somewhere reversal bars, single bar reversals, double bar reversals at this point here, there's a good chance also to get in here much tighter with a better risk-reward ratio. So okay, this is the first. So I'm just jumping in to IFF, very short. At the weekly chart, at the monthly chart, what do we see here? Good up move. So here we came already in a volatile phase. It went to the side, went down here. So this crisscross is around the SMA 20. It went up, goes up here already, and now we are in a phase, in a resistance phase of this price level here. And of course, this is always a little bit tricky if you are in such a phase here. But I'm just going to the weekly chart. And the weekly chart shows us that here we are with quite in some bullish candles. The market went up here, got back here again to the SMA 8. Now we see here this bullish candle at the SMA 20 and a very strong up move here. And also the candle here, the last week's candle, seems also to be bullish. And looking at the daily chart, we see that the market went up, SMA 20 up, back to the SMA 20 of the weekly chart, which again had here a reaction. The market goes up here, came back to the SMA 20 and had a strong candle into the long direction, green or blue candle in the long direction. So here also the possibility is we are here at the resistance levels. It seems there is a possibility to break out here out of this one. The possibility would be here to get in with such a setup, to take this candle a little bit above, slightly below. In this case, basically what I would do is I would let the stop work. So in this case, what I'm always doing is if I really cannot project any target, I'm setting my target somewhere where I could project it, which might be not be really reasonable, but I'm taking then the trailing stops, in this case pivot stops, to trail behind and then really let the stop work and not really trying to reach the target, but not really have the target that much in focus. Then I have much more the stop in focus where the market goes and where I can trail the stop at the best. Okay, so this is from my side. Rudi, Martin?
Yeah, I am.
Thanks, guys.
Awesome.
That was kind of great today. I really love your setups that you're showing here. And well, I think the last words should be that we going into a summer pause until the 13th of September. We will be back on the 13th of September. Until then, we all wish you very, very good trades, nice trading weeks, good profits. But we want to remember, take care about your stops, because normally August and September are kind of the worst trading months you could find in case for indices or stocks. So the seasonality really is, pointing to the downside a little bit. So don't expect too big moves. Don't expect the market to explode to the upside. I guess we will be in something more like a sideways range, maybe adding some points on top where we are now. But we also have to prepare for the other direction and be very careful. Markets could turn around quite quickly in August and September. Most of the crashes we have seen in history have been in August or September. So take care about your positions. We wish you the best of luck. And we just say, see you again on the 13th of September at the same time we've been online right now. Bye-bye, guys.
Bye-bye.